All right, back to work, back to work. What a day, what a move this afternoon. Man, oh man, hope you guys made some money out there today. Some beautiful bear traps. Hope you guys watched last night's video. It's back to work tonight though. Thursday evening, getting ready for what should be another busy day tomorrow, Friday trading session. We get some more big moves on the charts. We got some big news coming tomorrow, and I've got some really great, exciting trades I'm tracking for Friday. I'm going to cover all my favorite trades in tonight's video that we have a game plan to make some money on the final day of the week, tomorrow, Friday morning. Before we jump in and get the party going tonight, as always, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. If you enjoy this stuff, you like this stuff, hit that like button for me. Drop me a comment. Give me a shout out in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro. We have a lot to cover in a very important video. Where are the best trades setting up for Friday? Boy, another big day of movement on the charts. S&P is bullish. Nasdaq is bullish. Oil is setting up to be pretty bullish as well. But over on the S&P and the Nasdaq, I think everybody right now is waiting for a pullback, right? Everybody's waiting for a pullback right now to load the boat, right, for another leg higher. So I definitely have some pullback setups I'm watching on the S&P and the Nasdaq. But you know, guys, we've made some really big moves over the past couple days. I can almost guarantee there will be some potential shorts off the high here. I've got a couple very specific reversal setups I'm tracking here for tomorrow. Don't sell these things until you watch this video here tonight, because I want to make sure to keep you out of trouble to catch those tops. We'll talk about kind of the perfect pullback scenario for tomorrow, right? Can we make money on the shorts during the pullback and then scoop it up, right, and buy the dip? I'll show you my game plan. I'll show you the best way to time the entries in both directions on the video, kind of timing that perfect pullback here for tomorrow. So we're going to cover a lot of the long side and the short side here on the S&P and the Nasdaq. Oil, if you watched last night's video, oil's finally pulling back into that breakout pullback area. Get some beautiful bear trap setups I'm watching to use stops as fuel on the oil. And if it all breaks down, if it all breaks down, I get some great reversal setups I'm tracking for the short side on oil as well. So we got plenty to talk about and to look forward to. I'm getting excited just thinking about this stuff here right now for Friday. Now, speaking of Friday, before we jump in and talk about these trades here for tomorrow, let's all get on the same page for tomorrow, because we kind of have three variables, three things you want to keep in mind here for tomorrow. First thing, of course, is Jerome Powell. Now, normally Jerome Powell would be a pretty significant part, and he definitely might be a significant part of this plan for tomorrow. He has a keynote speech, right? Not a testimony, in front of the Senate Banking Committee that he does a couple times a year. This is a keynote speech, but everybody's obsessed with rates and the Fed and inflation. So we definitely anticipate he would normally be a big part of the game plan for tomorrow, and it's definitely a known unknown. The reason why I say we're not so sure how much he'll impact us is because, the debt ceiling drama continues this week. The last 2 days, the markets have been lit on fire after seeing optimistic headlines about the debt ceiling. So that really is the big variable here for tomorrow. I would normally say expect a slowdown into Jerome Powell tomorrow morning. It's been a wild couple days, but again, who knows, right? If we get some really good news or some very bad news out of that debt ceiling kind of debate or drama that we're seeing here right now, that's definitely a known unknown. That's something we're watching closely here for tomorrow. So that's our second variable. The third thing really is, remember, Fridays love to run. So whenever I kind of go into a Friday morning, my mindset is always, let's stay patient, disciplined, obviously, but try to get into something early in the morning on a Friday. And then I like to leave an open position, right, into lunch, into Friday afternoon. If you've been following my videos, you probably know that Fridays, they get a bit lower volume, into lunch in the afternoons. And sometimes Fridays can really run. And so my mindset is always get into something early when the volume and liquidity is good. Try to hold on to something, right, a little small piece into lunch into the afternoon session. Got to be careful putting risk on, putting new trades on after 11:15, 11:30, right? So got to have a good reason to be trading after lunch on a Friday. Now, we've had a couple really big days, some really big moves the last 2 days. So tomorrow may not be that big runner to a Friday, but that's where my head is at on a Friday morning. So Jerome Powell at 11 o'clock Eastern time, will the markets care about that, right? Or will they shift their focus right now to what appears to be the bigger issue here, right? The bigger drama, right? The bigger catalyst, which of course are updates coming out of the White House regarding the debt ceiling. So we're going to keep an eye on that tomorrow morning across all of these markets. Now, back to our charts though, right? Because the money is made using setups on the charts. And if you like making money, I would definitely make sure you watch all the way to the end of this video here tonight, because every trade I talk about can be applied to your favorite market, especially the Emini and the Nasdaq here this evening. We'll start with the S&P first. We'll go S&P, we'll go SPY, right? S&P SPY, Nasdaq and the QQQs, and we'll wrap it up, of course, tonight on the mighty crude oil. Starting off here in the S&P. Now, don't forget, all of these charts tonight are tick charts. Right? They're all tick charts, upper left-hand corner. This is the 21 EMA. All right, be aware of that. And then down in the description of the video here tonight, I'm going to give you guys some 60-minute charts, some 4-hour charts that'll give you a bit of a bigger picture look. And on a day like today, after a very big move 2 days in a row now, those higher time frame charts are very, very important to get a bigger picture. And I use these to give me directional bias and to kind of tip me off to where the best setups are probably going to be the following day. So grab those links, and I'll put all the important links down in the description of the video. All right, so knowing that much, what's the most important factor on the chart right now? There are two key components right now on the S&P 500. They're a little bit different on the Nasdaq. First of all, we're trending, right? We have a trending market right now. Now, if you're taking my free trading course, what do we know about trends? We know that trends are trying to get somewhere, right? Trying to accomplish something. We also know that trends love to use channels, right? They love to draw channels off the highs, right? In a bull market, pin it down at the lows, and buyers love to buy right off the low of channels, right? They do. That's the first clue. Okay, so the first clue is we're trending, we're looking for channels, all right? Now this market may keep going higher here, and we may have to adjust this channel off the high, right? But that's the overall idea, right? Trying to find channels and buy off channels in a trending market. The second component is, which is a little bit different than the Nasdaq, is you'll notice we've got some space. Very little space, but we have some space to run. And what that tells us is that we may not be done here, right? This market may continue to keep grinding higher here. And because of that, there probably are a couple kind of last call entries as we go higher, right? So we definitely have some more space to run in the short term, right? The big objective, and again, like I said before, that 4-hour chart, you'll see that linked up in the description. You'll see those big levels, right? So we probably have some space to keep on going here. So on the S&P, my favorite trades, of course, are going to be getting those nice deep pullbacks, okay? And we'll talk about 3 different variations of this because, you know, nothing is ever perfect and cut and dry. So we'll talk about 3 different kind of variations of that kind of perfect pullback I'm watching for tomorrow. I also want to talk about in the video here tonight, I want to talk about how to buy this if it keeps going higher, right? Because we have some space to run. And then later on in the lesson here this evening, I want to talk about 2 very important topics, which is how to short these things, right? Because, you know, eventually we'll run out of buyers. Eventually we'll get that sharp correction. And I know everybody wants to make some moolah on that pullback going lower. And there's one more variation, right? Because oftentimes when we see big moves like these, we end up going sideways, right? So what if we go sideways here tonight? We're going to cover those details later on in the video. So we got a lot to cover here, so make sure you get comfortable, grab some screenshots, and if you got any questions, hit me up in the comment section down below. Now, we've got some space to go. Now, we talked about this last night, right? Let's kind of rewind the tape here. Let's go back to last night's video. In last night's video, you may recall this. I got a bunch of emails about this from you guys making money this today. Strong move up. Shallow pullback, right? Higher high in price. And what did we talk about last night? If we keep going higher, what do? You buy traps. Right? If we keep going higher, we buy traps. This is almost verbatim we talked about last night on the video. All right? So this pattern, this pattern, which we talked about last night, is very similar here. Okay, so again, we have some space to run. If we keep going higher here, and you want kind of that last call, right? That last call entry, it'll be traps below the low. Okay, we call these trap setups in our free trading course, right? You guys are learning these right now, right? Very simple. Strong move, shallow pullback, higher high in price, traps. Okay, now remember, when you're buying relatively high like this, you want to be using, well, at least what I'll be doing is using smaller position sizes. Okay, these are where you use half size, quarter size, right? These are more aggressive entries up here. Okay, you use a full size position, or if I were you, I would use a full size position, right, on the deeper pullbacks. All right, so shallow pullbacks, right? Shallow pullbacks where the risk reward ratio isn't as great, we go relatively small. Okay, with this case with bear traps. Now, let's talk about the deeper pullback, right? Because that's kind of the favorite. And again, be aware, if we keep going higher, we're going to have to adjust this channel, right, and then look for it. Okay, let's talk about 3 variations on that deep pullback. The best one you want to do is you want to wait for that nice deep pullback. And remember, we want to buy low, right? In a bull market like this, we want to buy off the low of this channel, ideally. The hard part is timing the entry, right? Getting the proper entry timing can be really, really difficult. So I'm not a really big fan of simply buying the low. What I like to do is wait to get underneath the moving average, start getting around that channel, and start looking for the bears to come in. Once we see those bears come in and try, I like to use 2 tries. Then I know the sellers are committed, and I can now use their stops as fuel with what we call a failure pattern. Okay, good example right here. We had that nice strong rip higher. We pull back and see, look closely. We pull back, the bears try once, they try twice, right? See? Now think of where stops are. They're right there. Okay, so this is a very simple, it's a failure pattern like you guys are learning, right, in the free trading course, right? So that's a great one, okay, over here, right? So again, difficult to time the pullback, right? Difficult to time the finish, right? To time the bottom. Don't bother timing the bottom. Let the bears try a couple times. Then I can use their stops and I can buy into their stop losses for a run back up to retest that high. Now remember, we oftentimes get these combinations, okay? We call them failure into pullback combos, right? Failure pattern triggers into stops, and then we go up and pull back and go from there, right? We call these failure patterns, right? Basically, it's a seller reversal failure, right? It's a failed reversal, basically, right? Failure pattern into that pullback pattern. Right? Now, pullback patterns have some very specific rules, right? We want to see a higher high in price, a slope moving average. You guys are learning this, right, in the free trading course, which reminds me, I know that most of you guys have taken the free class or you're taking the free video series course right now. But if you're watching for the first time right now and you haven't learned all these entry tactics I'm talking about, I'll put a link up there for you in the upper right-hand corner. Grab that link. Take the free trading course that linked up right there, because the strategy you'll learn in that short video series will teach you a simple trick to know exactly where the best winning trades are going to be that day. And I'll make it easy to start making money on your own account by teaching you 4 of my favorite entry patterns, like failures, like pullback combinations. If you're tired of missing the best trades each day, if you're taking too many losses, grab that link that popped up there. Take that free trading course. You're going to love it. Perfect for someone trying to get a roadmap to make more consistent profits each day, and it works on any market that you want to apply it to, right? So grab the link, and again, I'll link them all up in the description here as well, all right? So remember, as we get that deep pullback, right, as we pull back, again, get underneath, right, or on these channels, look for 1, look for 2, and then buy right into those stop losses. Now, 2 more variations, all right? 2 more variations, and then we'll talk about the short off the high here in a moment. Don't you worry. Now, sometimes what happens is sometimes we don't get that deep pullback. Okay, I want the deep pullback, but sometimes I don't get it. Now think about it. You have to think, right? You have to think that right now there's a lot of buyers, right, waiting to buy down here, right? A lot of buyers want to buy low. And again, this channel might be a bit steeper tomorrow, right? So just be aware of that, all right? So we have to think there's a lot of buyers waiting down here. What if all we got was a shallow pullback? right? Something like around this, 4,200 level, right? What if all we got was a shallow pullback? Now, can I still buy that? You can, because we're very bullish right now and we haven't finished the objective yet. But what is the problem? Well, what's the problem here? There's two problems. One, we don't have all the big money, right? We don't have that good amount of buyers waiting here. That's one. And two, we're buying relatively high. We don't want to buy high, we want to buy low. So how do we buy a shallow pullback? This is where we make a small adjustment to that failure pattern. Watch closely. We want to trap the bears in now, but I don't want to be buying up here, right? I don't want to be buying here, right? Why? Because now my risk is here and my reward is just that, right? Not a good risk reward, okay? If I see a deep pullback, 1, 2, I can buy into stops right there because now what's the risk reward? The risk is here, the reward is here. Look at how that looks great. Okay, I can do that trade, right? Risk reward's a big filter for us in our trade room. So if I see a shallow pullback here, not only am I not recruiting all the buyers, which because of the self-fulfilling prophecy will make the trade work better, right? I'm also buying high. So I have to make sure I buy as low as I can. Let those bears try twice and make sure you get the trap entry right off of that low. Now what's my risk? Now my risk is here. I'll show you guys how to find the right signal candle right in that free video course, right? So your risk now is there, your reward now is there. That's a much better trade, okay? It's a very small adjustment, and I know this is more advanced, but I think you can handle it. I think you can take it, right? That makes sense, right? You're gonna buy as low as you can when you're buying shallow. All right, because A, you need to get that risk-reward ratio in line with the smart money in the market, and B, we need to ultimately use their stops as fuel to fuel this higher, because again, you're not going to have as many buyers there. All right, so as we say in our trade room, shallow pullback traps, right? Deep pullback failures, right? Traps and failures. You guys learned that in that free trading course. Final one, right? Final variation, and then we'll talk about some shorts coming off the high here. Final variation, V bottom. Okay, we might get that deep pullback here, and we may just bounce right off that low. Right? We may not get that 1, 2 back up, right? What if it just V bottoms off the low? If it V bottoms off the low, it'll almost always begin to grind, right? What happens is it's basically a short squeeze, right? The bears get out of the way, the market pops up, right? The bears are squeezed and it kind of grinds up. When that happens, it's very, very simple. Draw a trend line off these highs, right? Bring it down off that low, find that channel, and then go out and find swings, okay? There's a lot of reasons why you want to do it this way. The big one is if I wait if it bounces hard, okay, and then I get 1 try, 2 try, right, to try to rope in some bears, right, and you stops, again, this makes sense, right? My risk is here, my reward is here, okay? You cannot make a living in trading taking those types of trades. Right? And maybe you say, well, I'll put my stop right there. I'll be fine. That's fine. But this type of equation, right? This range basically says you are basically susceptible to a shakeout all the way in this area, right? So in order for you to protect your trade, you have to have your stop down here. Right? It's just, again, you can put your stop wherever you want, but when that range is defined like that, you need to get in as low as you possibly can. Right? So how do I get that better risk reward? Again, what I like to do is find that trend line off the high, right? Grab it off that low. And again, in this case, it bounces hard off of that low. I'm looking for that trap, right? Because now again, think about it, right? What's your risk reward ratio, right? Now your risk here, right? Now reward is there. It's much more desirable. You'll get more of the smart money in on that trade. Much, much more likely to make money on that trade there than trying to buy as it goes up above that breakout high. All right. What oftentimes happens is it'll V bottom off that low, pop up, grind up. You'll grab that channel like this, right? Grab that trap. I love traps, right? I love traps. This one's very important though to get that trap off that low if it does V bottom. All right. And I know that's more complicated. I apologize. I don't want to go too much complicated, but do you want to make money? If you want to make money, that's set up right, that you'll want to look for, which will give you. Those are almost bulletproof, right? As we go back to the retest the high. All right, guys. So 3 different variations, right? 3 variations of that pullback. Now let's talk about what if we go sideways up here. Right? Let's talk about how do we time the best entry for the short, because as you probably noticed today on a market like the Nasdaq, it was tough to pick that top today, right? It's difficult to pick those tops. So let's talk about, right, how do we short these things, right? So over the Nasdaq. Now, the one big difference between the S&P and the Nasdaq is that the Nasdaq has made a very, very big move over the last 2 days. Usually what happens after a big move over a multi-day period is the next day goes sideways. Okay, so we're very much looking for or anticipating some sort of range on the Nasdaq over the next trading session. Now, the good news is that ranges are really, really easy to trade, but be aware of that. So same thing, same basic idea here, right, on the Nasdaq. We're trending higher, right? We're trending higher. So we're definitely looking for channels, right? Trending markets say look for channels. My favorite trade, of course, right, is that deep pullback, trap them in and back up, whatever variation we just talked about, right, on the S&P, all right? How do we look for a short in a situation like this? The way that you do it is you look for trap setups, right? Basically bull traps. Now, let's go back and kind of run the tape here. Okay, as we started pushing higher here, it's very difficult to predict that top. This is why I don't do that, right? This is why you do not want to try to call tops in a bull market. The way that you sell a top, right, is you wait for the buyers try once, buyers try twice, and you grab traps. Okay, now, as I mentioned last night, remember, these are the category of, these are not full-size positions, right? These are small positions. They're half size, they're quarter size, and a lot of them will do something like this, right? A lot of them, you will get a good signal. You'll get your one-to-one target. You'll move that stop down to your point of entry, and you'll eventually get stopped out as it keeps going higher. However, though, the reason why you don't need or want a big position on this, you don't even need one, because if you're right about the reversal, the size of that reward can be huge, right? That's the benefit of a reversal trade, right? Is you get these oversized returns for what can be a very small amount of risk. So like I tell all of our students in our trade room, when you're trying to call tops and bottoms, first of all, you need the right setup, right? You need to get, we call these bull traps, right? It's basically a crown reversal pattern, right? And again, you want to go a bit smaller size on these because A, they're not going to be the most reliable trade, right? They're not going to be as consistently, profitable as a pullback setup. You'll get a lot of them that will go one, right? You'll get the one-to-one, you'll get that first profit target, but you won't get much more. But the ones that do, right? The 3 out of 10, right? That do, they'll dump, and you'll be able to get these really nice big profits. You won't need a very big position. All right. So that's one of the key components is wait for the proper setup and obviously you can do whatever you want, but if it's me, I will go very small size because, we don't want to trip over dollar bills to pick up nickels and dimes, right? Keep your powder dry for the trades that have the most potential to really make you some money, all right? So understanding that basic principle right there, we're running into overhead levels here, and I might add that, remember, it doesn't matter what levels of resistance you're running into. When a bull market runs into resistance, it just keeps on going sometimes, right? So this is where we have to be careful. That's why I said, right, be very careful, use smaller size, right, when you're trying to go against a trend. However, we are anticipating, right, we are definitely anticipating, right, that pullback. And if we can get that pullback, right, get the buyers trying once, get the buyers trying twice, right? If we're going to sell off this high, this is where you want to do it, right? You want to sell it with a bull trap. Okay. Now, a lot of the reason why you want to do it this way too is because we need to sell as high as we possibly can. The last thing I want to do is wait for those buyers to try once, try twice, and then sell right into those stops like that, because now you're running right into a bear trap, right? If I use that classic one try, two try, and I sell into stops right here, Not a very good idea, right? I'm selling pretty low. You'll get your face ripped off in those types of trades. If I time the entry properly, I can make a profit and still see that trade go, right? I don't need, right? It can still rip higher here and I can still make a profit on the way. So that's why the bull trap is such a valuable, really it's the only way in a situation like this that you want to be shorting off those highs, right? And then once we do get that, right? Once we do get that deep pull back off those highs now, right? Get that trap going lower, then we can come in, trap the bears in, right? And bam, right back up again, right? This is kind of the definition of kind of the perfect pullback, right? Getting the buyers trapped in by chasing it with FOMO too high, right? Bull trap off the high. And then as we pull back into support levels like channel lows, right? We then use that same game plan I talked about on the S&P a few moments ago. On the NASDAQ too, there might be a larger channel, right, coming in here right now. It's not difficult to think this can keep going higher here. So like on the S&P I mentioned earlier, right, if we keep on grinding higher, those bear traps, right, are the way to go as you go higher. That way you're not buying too high up here. And then eventually we'll start to calm down here. The buyers will start trying, they'll start failing, and that's when you start getting those bull traps, those crown reversals off the high, right? Update that channel, get back below the moving average. Remember, we're not a bear market overall. We're a bull market overall, right? A relatively deep correction, a relatively sharp correction can be very lucrative if you pick the spot correctly. But also, too, it could easily fool some bears into thinking we're reversing, trap those bears in, let those sellers, let them commit, right? Remember, it's very difficult to pick those bottoms. It's difficult to pick that exact bottom. I would rather wait for the bears to come in, try a couple times, and then light those stops up and use that squeeze going back up to retest the high. Okay? This is a very common dance that we play in the markets, right? As we're going higher, we're trying to buy low at traps. As the buyers begin to exhaust at the highs, we're trapping them in and selling as high as we can. Okay, that's the key. Sell as high as you can, right? Because as it drops off the high, when you're cashing that paycheck, right, going lower, now the professionals are getting out. The rookies come back in, right? Right, calling the rookies. They come in and chase it, and they're trapped, right? The good old rope-a-dope, right, that plays out almost every day in a strong trend, all right? Learn to understand this dance. And, well, first of all, you'll be able to not only make money consistently, but you'll be able to avoid the classic traps and the losses that I think every rookie trader kind of goes through early in their career. All right, so that's how you short it, and then buy it back up from there. Now, the last kind of piece of this is a range. Right? Now, when it comes to ranges, and this, of course, I'm going to do my best to kind of anticipate where it'll be tonight. It could there's no way to know. Kind of, we open up and keep going higher here. But once we start going sideways in a range, okay, there's really two really effective ways to make money in a range bound market. The first thing is, once we start going sideways, that range becomes a magnet. And then with a bullish bias, like this example is right now, you want to start finding levels of support below the range. Okay? Things like prior swings, things like trend lines, right? You want to go looking for support below it. Okay? Those are where the money is. So again, we're bullish. We want to be a buyer, right? Want to buy a support line. Again, we'll go out and we'll find more of these tomorrow, right? Support line. And then what we're going to do is you want to wait for the pullback. Now, this can take some time. This can take some time. Sometimes these ranges, they get all chopped up. But once they pull back, though, there's probably going to be a wall of buyers just waiting to buy there. Now, again, my personal opinion, I don't like to pick bottoms, right? I would rather wait for this thing to pull back. I'd rather let the bears come in and try to short this and use their stops as fuel. Okay, sometimes these pullbacks, especially after a really, really big move we saw the last couple of days, sometimes these things can be very, very sharp, right? And so, like I mentioned before, get those little deep pullbacks, right? Don't chase it. Don't let that pullback fool you. Let those bears try a couple times and sell right into their stops. Now, if we're really lucky, we'll get like some really big pullback here, right? Down to some low here. We'll trap the bears in, and then we can use that last call entry that trap entry, right? A technical bear trap entry on the way higher. This is kind of the dream scenario, right? We go into a trading range, we find levels of support, right? We get that deep pullback. We don't try to predict the bottom, right? No, we wait for the pullback to the 21 moving average. We let the bears try a couple times. We use their stops as basically gasoline, right, to fuel this move going higher. At this point, where does the market want to go? It wants to go back and take out that high, right? It wants to go back into the range. So as it tries to go back in the range now we go picking entries to buy as low as we can, because we don't want to buy high, we want to buy as low as we can, and that's where those trap setups come in, right? The actual technical traps that you guys are learning in the free trading course, all right? So these ranges are pretty simple, right? The best possible scenario would be we draw a trend line off the highs, bring it down off that low, and now you've got a trap off the low of that channel. That is almost a guaranteed winner. Almost a guaranteed winner as it snaps back up into that trading range. All right. There are a couple other variations of this. For example, the amount we go below the range can be projected above the range. There can be breakout trades, right, as we go above that trading range. We'll talk about that in the trade room, obviously. You'll learn about that stuff in the free trading course. I can't cover all that stuff here tonight, but that's the general game plan, though, of a bull market into a trading range. All right, guys. I know I've covered some more advanced tactics in this, but hopefully it all makes sense. And of course, we'll cover more tomorrow in the trade room. We'll go into a lot more detail, of course, in that free video series. Wrapping things up here right now on the crude oil. Oil is pretty straightforward. If you watched last night's video, there are two basic components right now on the oil chart. First of all, you got to zoom out a little bit here on this. We have a bullish move, right, into a trading range. It's been a hell of a mess, you can see, the last couple days. But ultimately, we got this pullback, right? The bears are trapped in, right? And now we're running higher. Okay, very similar we talked about earlier, right? Bears are trapped in. We're now, we get that strong run higher. Now we've got that new channel coming off, like I just showed you, right? And now looking for that finishing job, right? So we have a pretty good idea where the market wants to go. It wants to go take out these highs up around 74. Okay, and we're basically trying now to get that entry trigger right off the low of that channel. Okay, it's a bloody mess. It's oil. Oil's a little bit messy right now because of the Ukraine war, but that's the general idea, almost exactly as we talked about a moment ago there, right on the Nasdaq. Okay, so we're trying to go back up into that trading range right now, take out those highs. Okay, so with that said, second component to it is this previous range. So this range right here, okay, now we mentioned this last night, right? So when we are bullish and we go into a trading range and we rotate off the low, no surprise there, right? We break down, bears once, bears twice, snap back up. I mean, come on. These things happen over and over and over again. We just talked about this a moment ago, right? So now what happens a lot of times is they'll rip up and they'll pull back and they'll use the high of that range. It's a very simple breakout pullback, right? It's simply a range breakout pullback, okay? Strong move up for the buyers, right? Strong move says they want to retest that high. We already know pretty much where the market wants to go as it is. So now it's just a matter of getting these bears roped in and getting into an entry going long here, right? Pretty simple. We are 3 legs off the high. Always love to see that. I've got levels of support, right? Pretty much support everywhere here on this chart right now. It's a relatively deep pullback. At this point, good example, tough to pick the bottom. I'd like to wait for these bears to come out, get them roped in, and use their stops as fuel with a failure pattern going back higher. So it's very similar we just talked about on the Nasdaq, right? We're going to breakout pullback. We're trying to go back up and retest this high and eventually potentially that 73.89 as we go. Now, as I mentioned before on the S&P, sometimes these things will spike, right? If they do spike going higher here, it's a pretty simple game plan then. The key is you want to buy as low as you can, and that's where traps come in, right? So we have a pretty good understanding of what's going on, right? We break out, we're pulling back, we're trying to go up and take out that high. If I can trap in these bears at a relatively low price, I guess I'll be buying the stops for a failure pattern back up. If we really jump off of this low and begin to rise higher, Now, not as right now, the risk reward ratio isn't as good, aren't as many buyers there anymore. And so now we want to look for that trap entry to make sure that, again, that risk to reward ratio is balanced for us as we go back up to retest the high. So that's what we're waiting for right now, right? We're simply waiting for the bears to commit so we can simply use their stops as fuel and make a run back up to retest the high. And if you've watched the video so far to this point, hopefully this makes a lot of sense. Okay. Now, I always try to anticipate what if I'm wrong. What if I'm wrong? If you go into the description, you will see a 60-minute chart, and you can see there's definitely potential. We might be forming one bigger range here. If we were to roll lower, what's the best way? Because we assume that bears will try to take that low out, right? Remember, ranges are balanced markets. Okay, so if we go lower, we'll probably try to rotate about the amount off the high back below that low. So if we end up rotating lower and we can clear through some of these support trend lines, right here is going to be the area where we're trying to trap those bears in, right, back up. But if we begin to take off the downside, what would be the best short? What's the concern? The concern is I'm too low, right? I have to get that thing to roll over, right, knock the bulls out of the game, and now we're so low, we have to sell high with bull traps. Right, so as we run lower, this is, again, if you understand the idea of not chasing markets, the next big objective now is that big retest of that low. So if we were to roll over and go lower, there's one trade in my mind that is a bull trap. All right, makes sense? Right, so if we do end up failing off the trade we want right now and we roll over here, we have to get that roll over to give us that bearish momentum. Okay, now don't chase it. Okay, now plan the better entry, get a better entry with a bull trap above the high. And who knows, right? Maybe we can use that trend line as resistance there on the way out, right? Target, of course, back down to that low. All right? So those are two kind of setups, 2, 3 setups I'm watching for right now on the oil. Really what matters now is what happens in this area, right? Do the bears struggle and get squeezed, which what we're hoping for tomorrow, or do the bears succeed, run lower, and then it's just a mad dash getting in before we take out that low. And then potentially from there, possibly roping in the bears down here, right, and squeezing back up, because now it becomes one big range, right? So 2 try failure off the low and squeezing back up into that range above us. We'll cover more of that in the trade room next time. All right, guys? But that's the general game plan now, right, on the crude oil. Now we wait and see what happens tomorrow, right? The game plan is set. As you can see, I like to go through some different scenarios because, nobody knows what's going to happen the following day. That's what we game plan, right? That way you've got multiple ways to capitalize no matter what the market throws at you. Now, guys, don't forget, tomorrow morning, every morning, we're going to trade this stuff together in our trade room. It's so much easier to learn this stuff when you're going out and doing it with me every morning. We open up every morning at 8 o'clock Eastern time. I would love to have you there learning this stuff and trading right along with us. I'll put the trade room membership information. I'll put the free course links. Everything will be down in the description of the YouTube video tonight. If you need any help getting access to any of the free trading classes or any help along the way, don't be afraid to call the office or use live chat on the right-hand side. All right, guys, if you're watching this right now, thank you so much for watching all the way to the end, putting the effort in, sticking around all the way through. You are the person I do these videos for. So thank you so much for tuning in, sticking around, and supporting the channel. Now get out of here, get some rest tonight. Another busy day coming tomorrow. If tomorrow is half as good as the last couple of days we've had, it'll be a very good day. Remember, get in early though. Early in, leave that runner, and we'll see what happens here with the debt ceiling drama tomorrow as well. All right, guys, we'll wrap things up for now. Have a great rest of your evening. My name is Joseph. As always, be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.